Welcome to TradingHighProbability.com. Today it is May 29th, 2010. We're going to start off by looking at the spider. This is going to be a condensed version of this weekend's video review. Since we're only allowed 8 to 10 minutes on the YouTube presentation, we're going to go ahead and display our email address, and you can go ahead and just send us your email and we will send you the link to our flash video, which will have an in-depth analysis of our entire review, which is probably about a 15 to 20 minute video, and it'll show the daily charts, the weekly charts, the monthly charts, Fibonacci's, the wave patterns, the whole bit. So go ahead and send us that email to trader@tradinghighprobability.com, and we'll shoot you out the link to our flash presentation. But for a quick review, let's take a look at the spider. And as you can see, that back on May 4th, we had the kicker present, and we at this day confirmed our belief of this inside 2-day that occurred here, that we're starting to change direction, and we called for the top, and this is just confirming that call. And when you see this kicker develop, and you not only see it on the spider, but you also see it on the Qs as well, and there it is in purple right there. Oops, sorry about that. And then of course you see it on the Dow Jones, the Dow 30, which is right here, right there. So with that being said, that is when we call the top of this market, and we're re-entering our, the end to the bull run. We're entering our bear phase, or resuming our bear phase again, and now we are getting, and we can draw this on any chart, we're getting higher highs and lower lows. So at this point, this white line is our 200 period moving average, the yellow is our 135, and this cyan color, this light blue color right here, is our 50 period moving average. When we broke through this over here, we said that most likely this was going to pop back up and hit our 50, and sure enough, it did. It poked its head through, and again, just because it pokes its head through, everyone says, oh, everyone came back on the CNBC, and the talking heads were saying, oh, we're going higher, this is it. There was just a quick pullback, and there was a fat finger. That was no fat finger. That was real trading. Now, I do admit that having some of these stocks trade down to a penny, that was a bit far-fetched. Who knows how that happened? But nonetheless, it hit the 50, consolidated there for about 2 days, dropped to the 135, paused, and went right into that 200. And now we're butting our heads up right against that 200 period moving average. Could we poke our heads just above that? Sure, we can. We select. I mean, on the Qs and the spider, we pretty much filled that gap, but we still do have a slight gap right here to fill on the Dow, and we feel that it will fill anywhere from that point to this point, which is somewhere around the 10,350 to 10,450 area, that we could see this pop up to. It may or may not, but if it does, I don't think we're going to get anything really higher, because this is going to start rolling over like this. This is going to start coming down. This is going to start rolling over as well. We already had that rounding pattern at the top here. Now it's just a matter of the moving averages catching up to us. But to continue our analysis, we're also going to take a quick look back on our FXE call back in January, and we're going to see how that's doing, and that's still doing pretty good. And bring this back out here real quick. Here in January, where's January on my chart? Here it is. We said that after it fell through our 135 moving average, it came close to the 200. We figured that it was going to retest at 135 before falling apart. Sure enough, it did. Here on January 13th, it was $145 a share in the FXC, which is the euro currency, and that's to our US dollar. So that was $1.45 to our dollar. At this point, once we said that it was going to hit 135 in the next few months, sure enough, it did. Our long-term target is anywhere from 100 to 110, which would be close to par on our side at 100. And At this point, it fell down to around 135. And back in March, if you look back to our archives, you'll see that we also called for it to hit our 125 mark within the next 3 months. 3 to 6 months we called it, and sure enough, within this is March. 2 months later, it was already at our 125 area. We're still thinking that it's going to hit our 110 to 100 mark within the next 3 to 6 months as well. And you see that we're starting to have a slight double bottom, but it's not a nothing significant. Can we still break through this? Sure. Do we think it could pop up? It can, but for the longer term trend and those that are holding in, you already have, geez, a 145 to 122, a 16% profit, and you probably have another 20% drop still to go. Sure, it can consolidate in here for a while before dropping again, but our longer term outlook for the euro is about 110 to 100. And here's our MACD, not showing any real major divergences at this point. It did show somewhat of a divergence right here, and we'll have to see how this plays out over the next few days and see if anything happens over this weekend with the European markets and the currency. Just a quick look at the Qs. Qs have already filled the gap, and let's just make this a little bit bigger. This gap fill was right here. It came within a couple of pennies. That gap fill was we needed to get to 46.06, and the high here was 45.99. So we're just 7 cents short of that close, but we did fill the gap itself because of this low on this day here. So we're into the 135 on the Q. On the DIA, we already showed you what's going on with that, and the spider, we're right at that moving, that 200 period moving average, which we've already fallen back below. So we'll see what happens. But for now, we're going to wish you a happy weekend. And again, remember to send us an email for the complete weekend review, showing you not only the daily charts, but the weekly and monthly charts, Fibonacci levels, wave levels, and everything else that we can possibly share with you. Again, our email address is trader@tradinghighprobability.com. It'll be shown here on the screen. And have a great weekend. Thank you.